Have you ever wondered why gold, this shiny yellow metal, has been steadily increasing in value over the years? This isn't a random occurrence. Gold has a historical significance that stretches back thousands of years. It's been a symbol of wealth and power, a form of currency, and a global standard. Today, it's seen as a safe harbor during economic instability and a hedge against inflation. So, what makes gold such a valuable asset? Let's delve into the reasons behind its increasing value. Gold's value isn't just about its lustrous beauty or its historical significance, it's much more than that. When we speak of gold, we're talking about a commodity that has stood the test of time. But what makes gold so special? Why is its value consistently on the rise? To answer these questions, we need to consider a few key factors: inflation, economic instability, and the element of scarcity. Let's start with inflation. As we all know, inflation is the rate at which the general level of prices for goods and services is rising. It erodes purchasing power. Each unit of currency buys fewer goods and services. This is a concern for investors. But here's where gold comes into play. Gold has often been seen as a hedge against inflation. As the cost of living increases, the value of gold tends to rise as well. Now let's talk about economic instability. The world economy is like a ship on a turbulent sea, sometimes steady, sometimes not. There are recessions, market crashes, political upheavals, and global crises. In times of economic uncertainty, investors tend to flock towards gold. It's seen as a safe haven, a form of insurance against chaos. And finally, there's the factor of scarcity. Gold is finite. There's only so much of it that can be mined from the earth. This scarcity contributes to its high value. Unlike paper currency or digital funds, the supply of gold can't be increased at will. It takes time, effort, and resources to extract more gold. This inherent limitation in supply helps to preserve its value over time. So, when we talk about the rising value of gold, we're not just speaking about a shiny metal. We're speaking about an asset that has proven its worth over centuries. An asset that has served as a dependable store of value, a hedge against inflation, a safe haven in troubled times, and a precious resource limited in supply. These factors make gold not just a piece of jewelry but a strategic investment. Now, you might be wondering, how does gold stack up against traditional investments like stocks or real estate? Let's dive into this comparison. When we talk about traditional investments, stocks and real estate often come to mind. These have been the go-to for many investors over the years. Stocks offer the potential for high returns if you pick the right company to back. Real estate, on the other hand, provides the dual benefit of a tangible asset and potential rental income. However, these investments aren't without their risks. Stock markets can be volatile, and prices are susceptible to drastic swings. Similarly, real estate markets can fluctuate, and property values can plummet, leaving investors in a lurch. This is where gold shines. Gold has been a symbol of wealth and stability for thousands of years. Its value doesn't hinge on a company's performance or the state of the housing market. Instead, gold prices typically move in the opposite direction of the stock market, making it an effective hedge against economic downturns. But it's not just about stability. Gold also has the potential for growth. Over the past 50 years, gold prices have seen a steady upward trend. While there might be occasional dips, the long-term trajectory has been positive. This combination of stability and growth potential is what makes gold a compelling investment. Moreover, investing in gold can be as simple or as complex as you want it to be. You can buy physical gold in the form of bullion or coins, or you can invest in gold exchange-traded funds, which track the price of gold without requiring you to store the physical asset. However, like any investment, gold isn't foolproof. Its price can be influenced by global economic factors, and it doesn't provide any regular income like dividends from stocks or rent from real estate. But as part of a diversified portfolio, it can provide a safety net during uncertain times. While stocks and real estate have their place, gold offers unique advantages that can fortify your investment portfolio. So, we've established that gold has a lot to offer as an investment, but how do you get started? Well, it's not as complex as you might think. There are several ways to invest in gold, each with its own pros and cons. Let's delve into some of the most common options. Firstly, there are gold bars and coins. This is the most direct way to invest in gold. You can physically hold your investment, and there's a certain charm to having a tangible asset. However, it's important to consider storage and security. You'll need a safe place to keep your gold, and that can come with its own costs. Next, there's the option of gold exchange-traded funds, or ETFs. These are investment funds that track the price of gold. they're traded on stock exchanges just like shares. This makes them a convenient way to invest in gold without having to worry about physical storage. But remember, while you're investing in the price of gold, you won't actually own any physical gold with an ETF. Whether you choose gold bars, coins, or ETFs, it's crucial to do your research. Understand the market. Keep an eye on the factors that influence the price of gold, like the economy, geopolitical events, and supply and demand dynamics. Consider your financial goals and risk tolerance. Gold can be a great way to diversify your portfolio and hedge against inflation. But like any investment, it's not without risk. Gold prices can be volatile, and there's the potential for losses as well as gains. Seek advice from financial professionals. They can provide valuable insights and help you make informed decisions. Remember, investing isn't about getting rich quick, it's about building wealth over time. And gold, with its enduring value and historical stability, can be a key part of that journey. Investing in gold may seem intimidating, but with a bit of knowledge, it can be a golden opportunity. So start exploring, start learning, and perhaps, start investing. Your golden investment journey awaits. Let's summarize what we've learned about gold as an investment. We've delved into the fascinating world of gold, a precious metal that has held its value throughout the ages. We've seen how its price has been on an upward trajectory, largely because of its status as a safe haven investment, a shelter in times of economic uncertainty. We've compared gold to traditional investments like stocks and bonds. While these conventional avenues can provide significant returns, they also come with a level of risk. Gold, on the other hand, has proven to be a more stable asset, offering a hedge against inflation and currency fluctuations. We've also explored how to invest in gold. From buying physical gold like bars or coins to purchasing gold exchange-traded funds, the options are diverse. Each method has its pros and cons, and it's important to choose the one that aligns with your investment goals and risk tolerance. In essence, investing in gold is not just about purchasing a shiny metal. It's more than that. It's about understanding the economic factors that drive its value. It's about diversifying your investment portfolio. And ultimately, it's about securing your financial future, providing a safety net for yourself and your loved ones in an unpredictable world. Remember, investing in gold isn't just about buying a shiny metal. It's about securing your financial future. Before we wrap up, let's address some common questions about gold investment. Firstly, many ask, is gold a safe investment? The answer is yes, but with a caveat. Like any investment, gold carries its own set of risks and rewards. However, gold's intrinsic value and historical performance make it an attractive asset for investors looking for a hedge against economic uncertainty. Another question we often hear is, does gold offer a good return on investment? Well, the truth is, gold doesn't typically offer the same high returns as stocks or bonds. But that's not why investors choose gold. Gold is a wealth preserver, a safe haven during financial storms. Its value tends to rise when other investments falter. Then there's the question of how much should I invest in gold? This depends on your investment goals and risk tolerance. As a general rule, financial advisors suggest allocating about 10 to 20% of your portfolio to precious metals like gold. Many are curious, how can I invest in gold? There are several ways. You can buy physical gold, like coins or bullion. You can also invest in gold exchange-traded funds or gold mining stocks. Each method has its pros and cons, so it's crucial to do your research and choose the one that fits your investment strategy. Finally, some wonder, is now a good time to invest in gold? Timing the market is a challenging game, even for seasoned investors. However, given the current economic landscape and the increasing volatility in the market, many experts believe that now could indeed be an opportune time to invest in gold. Remember, investing in gold is not about getting rich quick. It's about protecting your wealth, diversifying your portfolio, and providing a safety net in times of economic turbulence. Investing in gold can be a solid strategy to protect and grow your wealth. So, are you ready to strike gold? Strike?